Better yet, if anyone just has questions or tickers you want to look at, let's just do it. I mean, I could just go endlessly because I have been looking at so many different tickers lately. I like to take either repeat trades or ones that you're able to keep on watch. And then why are you keeping it on watch? Why are you able to keep looking at it? Because it's trending. When it's trending up, there's no reason that you're going to have to take it off your watch list. Where there's no point where you see some of these people doing a watch list one day, completely next to one, new one the next, not even referring back to the other ones or having like rollover from one to another. Which when you first start off, you'd probably be like, oh, this guy's just repeating the same one. But why would I not keep watching VRS? You see in April, beginning of April, each candle's a day. Like that is very significant. Each day you just keep going up, 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 and up, and keep going. This was like my favorite one. Me and TJ both traded this multiple times, and every time we do this, no one takes the trade with us. I don't know whether we've made them all build an aversion to this ticker, or they just don't see it. I don't know, because the thing is, let me see if I can pull on Thinkorswim. When you have a stock like this that's trending, I don't even break down trending and ranging as much as someone like Red Ben is able to the using oscillators or this that, but I find it more helpful. Let's just break it down and see support and resistance. At the end of the day, you can always fall back on support resistance. Okay, let me go on the hourly chart. So things, it's kind of not in this course to do it, but doing multiple time frame analysis. It used to drive me nuts trying to piece it together, because then you start piecing it and you're like, oh, I think I get it. I think I get it. Once you do get multiple time frame analysis, like this stuff makes sense. Like you're able to go through all the different time frames and not feel like, sometimes it's as if you're more comfortable in real life. You're more comfortable in a situation and you don't want to fluctuate out of it. As in, you get stuck on the daily charts. Although you know how to use the 1 hour, the 5 minute, you don't literally know how to tie them all with one another. You always have that baseline using your daily charts, doing this or that. You need to be able to comfortably see it in like some 3D structure, like it, not literally 3D, conceptually in your head. You need to flow through the time frames and be able to see whether something is bullish or bearish. Just because on the 1 minute you see it's bearish, if you see on the 1 hour that it's still bullish, I mean, give it a few seconds. Like it may change, maybe a few minutes. But even vice versa, if you go 1 minute is very bullish and you have a terrible weekly chart. Actually, let's take here. I remember today here was trading really nicely, and then I started looking. Every time frame is overextended. There's no way it's going to hold its gains that long unless huge buyers come. Let's see. I don't know why the other bar isn't working. So even just using this noob chart where it's pulling it from, I don't know what side, it doesn't really matter. But we got 70 RSI, which actually isn't that bad on the daily. But look at that MACD. One thing I went over the other day with MACD, there's 3 things that you need to consider when you're using the MACD indicator for whatever it is. Not even one of the 3. This is not telling you to enter or exit. It's just straight up not. That's not what it's about. You get 1, you have the crossover. We all know the bullish crossover. When I teach people who are like try and trade or anything, in this case, I'd say when black goes above red, that's a good thing. Like you don't need to explain to them what the moving average is and all this and that. Just black goes above red, that's a good thing. Okay, that's 1. 2, it's where are we in relation to that 0 on the axis? So look on the right, you see right now this crossover is at 2.778. I mean, we're really high above 0, and you think about the phrase, everything reverts back to the mean. If you give this stock an infinite amount of time, like gonna go back to 0 very shortly. Like at some point, it's gonna have to go back to 0. So you look at it, see that's pretty much over. You have the RSI is nothing spectacular. Okay, let's change of time frame. And for swings, when I go through it, I now have the flexible grid where I do 1 hour on one side and daily on the other. Is anyone here that has like any thoughts on how they do it when you're going through and looking through stocks, because I guarantee that I imagine some others, like I'm not saying no one does, but the amount of tickers I look at through a day and go over nasty, like in the hundreds, and that's what really makes you able to trade a stock more confidently. And that's what me and Frank were talking about one day this week, where someone was asking us like, how do you like apply the fundamentals in a way that like makes sense? It's like, yeah, it's fundamentals, but it's also not. Like, I don't even know much about the company of here, but that's not here nor there. You're able to balance it into the whole grand scheme of things, where we all know here it makes Turtle Beaches, or I know that. I used to play Call of Duty, but they're not necessarily worth $100 to go keep going forever. So at some point, they're going to be able to have to pull back. Let me send you my... Actually, I'm sending the weekly. I don't mind if I am talking stuff, but if no one's here, look at that. So take a look at that chart. You have any thoughts? Even if you don't know volume zone, just look at the RSI and think about that time frame and what that would really be saying. So you have crazy oversold, overbought on the RSI. So that would generally indicate a pullback. But then you start factoring in the time frame into the whole grand scheme of this play. So when you're that overextended on the weekly, if you go to the shorter time frames and you're also overextended, you're fucked. Like, it's going to start dumping really hard. Let's say, and on this weekly chart, we were very oversold. And that would mean we may have a lot of room to go, and there's no reason for the RSI indicating it's going to be pulling back on us. Then we have a very bad signal on the lower time frames, on the daily or the hour. We're going to pull back, but we're not going to drop $10, or that's being very exaggerated. But the point is, with the longer the time frame, you're going to have to be treating it differently than you would otherwise. I never even used to look at the weekly time frame because I thought it was irrelevant, and clearly I was wrong, because I got to that point where I was like, why am I losing these trades? I don't get it. So TJ advised me, start using the weekly and don't enter a single trade that does not have a weekly chart that gives you an okay signal. And then I started to think a little more, and I've always thought about it, but all it's about is being able to get that perfect trade where all the time frames line up with one another, and you're able to see each time frame lining up in sanctum. So I don't necessarily know a great example right now, but let's say this was the weekly. Actually, I have an even better idea. So take that exact chart. I'm doing it on my own screen right now. Maybe I should expand it. Let's see what I could do. So if we were to go before here ran really hard, because when here ran a few weeks ago, I looked at it, I was like, shit, this thing ran like 75% yesterday. I was like, that's crazy. Like, I'm not going to trade this at all. And then I started looking, I was like, we all messed up. We should have all been swinging this stock for weeks already. I was like, it has been screaming for us to be swinging this, and we didn't. And then everyone chased it and lost money. So let me isolate. Okay, so even just using RSI and that itself, let's see what we can make from it. So we're going, it hit $90, all this and that. That was a while ago. What date was that? Okay, so that was a really long time ago. Let me zoom in now. So that's also one of the other things, is being able to zoom in and feel comfortable with how you're using the charts. I imagine that most of you guys, or most of us, like to use Thinkorswim. There's nothing wrong with using the other ones, but you need to be comfortable with your platform. When I started off, I would put off using this platform for so long. I would go play around with it a little bit. End of the day, I had no idea what the hell I was doing. Like, you need to be able to navigate in and out, and even when you think you know what you're doing, you don't. Because I've always felt like I was really good with my platform, and then I got IB. I thought I was really good with it, and then I started learning I don't know nothing. When John and TJ started to ask me about, do you use hotkeys, as if it was something that I should have already been doing the whole time, and I was like, you know what? I didn't even consider it. And then I started considering it for Thinkorswim. Now, all I do is do Control and plus, like you're regularly zooming in. So I'm just zooming in on my charts, and then I do space button, and it brings up the time frames, and then I just click on one of the other time frames. Before, it would take me like so long to go through a stock. That is what used to drive me crazy when I used to be able to, like I said, I go through like hundreds of tickers in a day because you don't need to take it too much. People who are doing due diligence on each little ticker, wasting all their time, it's good at first because it's going to teach you something. But no, that's not going to get you that great winning trade. It's all about the chart. So when we find one, wow, that's so nice. Here has been running really hard. Okay. So more isolated. Ignore the one on the bottom even. Volume zone oscillator. So let's say even just knowing the basics of RSI, look at that and then look at the price action. So I will circle on my little chart. Even just like a little high schooler, you could say, oh, teach them what the RSI does. It could pull back, and when the price is high, it's going to pull back. So let me show you where I would circle. You know what? It's not even sure what actually makes sense. Okay, so in this picture, at first I would actually do. Then it hit me. I was like, oh, I mean, it's already there for you. The RSI, that line right there is the overbought line. So once we're already getting there, that means we're going to have to start being a little bit more careful. And this is the weekly. So keep in mind, like we were saying before, once we get over there, we need to start using the time frames. But we are so overextended on the weekly that when this thing dumps, I'm willing to bet it dumps really prop it up. And then in the price, look at that white weekly chart. So if you're able to take that entry at the break, so regardless, I don't know what everyone's experience is. All you need to know is when you're trading breakouts, you enter at the breakout, not a second before, and you could enter a second after. But you need to factor in for that. So the point is, you see those three different candles. I want to circle it because it's a really important concept. I suck at writing on my surface, but like that arrow is like where you need to be seen. You don't take it or know anything. It's like that makes sense. Once it breaks, that's gonna have everything else going in line. You're gonna look at the level two. It's clearly gonna be showing something that's good for you because once you break that level, that's the resistance. Likely, there's not going to be much after that because someone's sitting there very heavy on the level two, and once you pass that, you're going to have some free skies to go. Look at that candle after it did that, and this is all the weekly. And the reason I'm doing this and using the weekly is because this is the most important. When you're taking losses, regardless if it's a penny stock, anything, go to the longer time frames. Yes, you can understand that the smaller the time frame, it's for scalping and this and that. But you are increasing the safety of your trade if, as a whole, you use longer time frames that are looking nicer compared to ones that have nicer, shorter time frames. And that's almost like a tongue tie. But point being, there's no reason that you should be taking this trade right now when you could have taken it that long ago. And I day traded it today. That's fine. But if I were to have swung this and I lose a lot of money, I'm going to look back on this and say, I am a dumbass. That entry was right before there on the weekly. So now let me take it back to the daily. This one's honestly just so textbook because if anyone remembers when it actually did run, this thing was like beautiful. It wasn't like a low float pump or anything. It had institutions behind it. It had news. It had good fundamentals and all this where this chart is just so perfect to go along with it. We all should have had this entry and made a shitload of money. And I didn't take this entry. Okay. Let me see. In the future, I'd like to find a way to screen share my screen with everyone because that would be so much easier. I guess while I'm doing this, one thing that is pretty important and can get confusing. My thinkorswim doesn't let me talk about it. One thing that can get confusing is knowing which indicator to be using. Just because you see me using RSI and D and volume zone oscillator, or you see whoever it is using Ichimoku clouds or Bollinger Bands or anything, it doesn't matter. Like, people can find success however they want. However, there is logic to it. Once you're able to understand how things are derived and how things are broken down, it's called multicollinearity, which sounds like a mouthful, but it makes sense. If you're going to be using an indicator that is doing very similar to the same thing as another one, what's the point? There is none. And it makes it even worse when they do start deferring from one another a little bit. There's no reason for them to be deferring when it comes to helping you make a decision. So all it does is make you more conflicted within yourself and make terrible choices. Even on my chart, you see the VZO, which is the volume zone oscillator. I don't even want to go into that right now. It's a beautiful, amazing indicator, but it has multicollinearity with RSI. Look at it and just go through where it goes up, it goes down. Overall, it pretty much follows one another. Where if you're going to be doing that and having signals on both of those for, oh, I'm going to enter, I'm going to exit here, enter here, exit there, you're going to be confusing the crap out of yourself. And that's how a lot of great traders begin, because they start trying to learn all the technical analysis, and you start overdoing it, and you get analysis paralysis, which is a true thing. And it's really the most frustrating one, because that's when you're grinding, you're studying all the time, think you're doing everything great, and then you start overanalyzing the crap out of everything and get it all tied up. So going back to what I was saying on the daily now, and the same goes for the overlays in the chart. You can do this or that. I just really have found a lot of value in 8 into 20 EMA, just because there is a lot of back testing behind it. And back testing is seeing the win percentage in hindsight, going back and seeing how it could have done in a certain market. And there's programs that could do it. There's plenty of sites you could BS with. But from what I know and what I've read, and there's research to support, RSI is very supported. I fought using RSI for the longest time. I still don't necessarily use divergence with it the best, but I used to try and use stochastics, which is very similar to RSI. You could sub in stochastics for your RSI, which would be an acceptable thing, but I just didn't find stochastics to be the most helpful thing for me, because it was a little bit, I don't know, it doesn't even matter. It was trippy. So then MACD. MACD, there are plenty of things you could substitute it for, but it does serve a lot of value for the sake that a large percentage of investors, traders, retail, whoever, everyone loves MACD. And that's a concept that's also important, just because, yes, you don't want to be with the herd, you want to be before the herd and all that stuff, but you don't want to be using indicators that no one else is using. Why? Because you need the volume. So if you're going to be taking entry when there's no volume before or after you, there's literally no point. So the point is to actually be before. So you need to be using the indicators that other people are using. And when you know everyone is using the MACD, you see that MACD cross, although it doesn't mean enter here, exit there. You see when that actually physically crosses, zoom in as close as you want. When it actually crosses, that volume will be there. I guarantee it. Like, whether it's algorithms or retail traders or market makers, we're all looking at the same thing. And that's how 100% runners are made, just like here. This is a picture of daily. Here's the daily. And I would never actually break down a ticker like this. And I actually don't know if there's anyone here with me, but I would re-listen to myself for days, because when you're able to break it down like this and take this all and do it in 3 seconds, like, that is the biggest thing. Cool, Ree. What's up? And JD. Either you have Mike, like, you guys can. And it's really difficult because you hear me, I'm just like saying different things. There's so many different components of it where you start thinking of one thing and like, oh, there's another one. Had trouble finding, you didn't know where you went. Oh, no, I'm here. So on the daily chart, so I was saying this is how 100% are made. So let's just break it down. You see we have price on the top, and then you go down. It says RSI. Okay, we have RSI, and then we have volume zone oscillator, relevant, irrelevant, but within that we have buy and sell volume. Thinkorswim's default gives you blue bars, this or that. I would never even consider that. We use a study in Thinkorswim, which if you don't have it, I'll give it to you. It shows you the red is the sells, the green is the buys. So even for a day one trader, green is good, red is bad. No, it wasn't like I used to do, and I used to trade off Robinhood. I used to buy the most red thing I could find and think that was a bullish thing. I mean, definitely not. Buying is a good thing. We're not afraid of it. So, and then we go to the bottom. We got MACD. Okay. MACD, like I said, I teach my friends for day one. All you have to teach them is the crossover, because it doesn't matter. Like, you don't need to teach them derivation of it, this or that. It comes with time. Like, there's benefits to me knowing it. Look at that crossover. Go to all the way on the right. We're about to do a bullish crossover, which is good. I don't want to get to the point. Take it back a little bit. Go to like around 4.2. You don't even have to see that close. There was a MAC there, and it didn't cross back over all that time. And you go to 5.4. And this is the concept I still stuck with divergence, but one thing that really helped divergence make sense to derivation wise is look at that gap that is in between those two lines. As it gets wider, that is literally what divergence is. Those lines are diverging from one another, which, yeah, I mean, that makes a lot of sense, there's that. But you don't even need to look at the price to do that. Generally, when you're doing divergence, you're going to be looking at an indicator and then looking at the price. I'm not saying necessarily right, or even saying I know what I'm talking about when it comes to divergence and comparing it to price. But when you start looking into MACD, at the moving averages and how they're moving away towards and away from one another. So when the price is moving away from one another and the indicator is moving wider away from one another, I mean, that is quite literally divergence. And that I still saw divergence. And the thing is, divergence is really, really useful. But that's another thing. You need to break down time frames in the shorter time frames. So before the breakout, we have 5.14. We get a little. How do I do this? I want to show you my screen. It's tripping me out. Oh, good night. You hear me, J? Okay. So you see that gap up? Let me circle. I'm just hopping around doing one little thing at a time because there's just so much you can break up. Yeah, go for it, Ray. That would be great. Because I'm just struggling to try and see how I can visually show it to you guys, because it would be way easier if I was just letting you guys all just see my screen, which we could get going in the future. But for now, that would be great. So you take it on your daily. What I like to do is just not to ever make anyone think like they need to give an answer, but being able to just be more involved in the education makes you so much better. Because now you're going to be getting your own thoughts rather than mine, because you may have no idea what I've even been saying this entire time. And that's fine, because I follow my own thoughts. So you go back to that last one, you see the white line that I put on the price. That is literally what a gap up is. We're on the daily, so that means that you see that red where it takes that little gap. That means it closed, probably had news. I'm pretty sure I remember there being news. Open. That is what a gap is. If we were to have done it vice versa and gap down, we would do the gap down where you're going to be opening way redder than you close. So you're going to be losing a lot of money. And those are the ones that really eat you alive. But the reason I'm pointing that out is because maybe not for here, but if there was another one, you see we gap up, good. A few months from, we're going to go gap down. We're going to start dumping again. When we get to that point where we get to where that bottom candle is, I want to do one more arrow because it will help right literally there. You could see that literally right there, when you break the bottom of that wick, the concept of a gap starts to make a lot of sense. I don't know what the real terminology is when you see a huge red candle. I still consider it a gap. I still use the terminology gap, but the true definition of a gap is where there is a physical gap there. So once you get in between this class is too literal. It's so funny. If you guys like have questions, that's great. I'm not even doing like this as a class. I just even talking out loud to yourself. It's pretty weird. I wouldn't really talk out loud to myself, but I thought I was talking to myself this whole time. So I'm glad to know you guys are here. So when you see that gap, there's no support or resistance in between. Like, I am a huge support and resistance guy. I guarantee you that once you get in between there, in between one and the other, you're going to see drastic price movement. So that is a huge concept, because then you take a stock like auto. This is one that had an alert trigger today. We're going to be watching it next week. I mean, I am for sure. I wasn't expecting it to go as hard as it wanted to today. Look at that chart. So here's the definition of a gap. How many dollars was that? It was $7, dumped on whatever news, although it really wasn't that like terrible news. We don't care. So it opened $3 less, and look where we are right now. So I'm also not a huge pattern guy. Yes, you have to know all the patterns, but I've seen too many people overuse the patterns and like use it like a textbook. That's not how it works. So we want to take the entry when we're breaking the last resistance. I think it may be better to use the candles because I have alert set on auto. So I alert triggered intraday today at 390. I want us to just look at this one right there, even if you guys have it on your own charts. So look at that last candle. You see you have the upper wick, which is that little thin part on the top, and we have the body, which is where most of the trading action was during the day. So I had an alert set at 490, which is almost the high before the gap fill, but not quite there. I was just using one of the candles that I thought was best suited. But beyond that, once we are getting to that gap, we want it to be ready to go when that gap comes. I have 3 more alerts. Let me get an actual price so we can actually make sense. My alerts are set at 440 and 415. Okay, let me see if I can break down the candle for us. Here we go. Yeah, I think I need 390. Yeah, I do. So if you don't know, you could right click on the candlestick itself within the chart and you correct this bar. That's going to bring up this thing. I never used to use it until I figured out what it was. And I was like, oh my God, like I didn't even realize I could break down the candlesticks to that extent. And it's huge. I also never use price alerts, but you guys probably already use price alerts. And I was just a noob getting really deep into my education and still lacking large things that really would help you be successful. And you'll always keep getting to that point where you just like wake up, not even wake up, you like, how have I been trading like without this the whole time? So you see on that we have 440 as our high, 381 as our low. So what did I say my price alerts were at? It was at 415, but 440 was certainly one, and the other one was 415. Okay. Why did I do that? Because you see the upper body of that candle and 415. For the end of that is 415. So that means all the people within that wick that bought and sold within that wick, it's not going to be that much resistance right there. Then once we break that 440, that means there's no more resistance there until we have that gap fill. Does not mean we're not going to drop back down, but that's going to be more dependent upon the volume and the level 2 and the tape, and being able to not be overextended while we get to that point. But that's why I have my alert triggered there, because I had the 390 alert triggered. Let me see if I can find it. I think it was the previous candle before. I had it set there because I knew it was going to be a good entry. If I would have bought the second I saw that alert trigger, I would have been good. Some of the time where you see the alert trigger, you're like 1 second because that volume starts spiking. You're like, damn, I set that really nicely. I did that on here the other day. Let's see. 390. I don't know. It's not important. I think the concept is there when it comes to the gap. You guys that are here, like, am I making any sense? Like, this is how I always think out loud in my own mind, even with all the confusion and all. And that's okay, because it's a big picture kind of thing where you don't have to be nitpicking every little thing. And just also keep in mind that I don't always do it like this, but we're also only on the daily time frame. This is not telling us the whole picture yet, but I do want to take a second because there are other people here. I'm glad to hear that, Pursuit, because that's how I felt at first. And I used to spend so much time trying to find resources and try to learn and try to do this and that. I was like, I'm putting in so much effort, and like, it makes no freaking sense. You listen to like all the guys like Adam Koo and everyone, very nice guys, great information, but it's a big picture. At some point, you need to just get told what you're doing, how to, like, not how to do it, but give it to me straight. Like, I don't really care. Like, you're not gonna hurt my feelings or make me think anything of you. I need to know what I need to know, and not read a whole book to get there, whole article. So that's why I have found a lot of love for these groups, especially when there's no ulterior motive in it. Like, just a free chat room. Like, we don't do anything wrong. That's why when people like say anything, or other groups are like charging all this money, I don't really care. Like, we do our own thing, and we do it way better than anyone, because there's no point in doing it the other way. Why am I putting values into that correction box? I'm not JD. So when you're looking at that, it's giving us what the actual values currently are. I could change it, but like that's not why I'm actually clicking it. What does using the correction box do for the chart? No. Yes, I mean, I could change the values, but the whole point of me doing that is so I could see to the penny what price we are looking at. Because I know 440, after 440, we're into that gap. That is the last little point of resistance that I wanted to see. So that's where I set my price alert. Do we all know how to set price alerts? If anyone doesn't, I'm happy to do it, because I didn't for a long time. Or should we do scene sharing? Yeah, I know. I'd be able to. Oh, we're trying on YouTube too. JC's not around. It's okay. That is my dream. Wish YouTube. Yeah, Pursuit. We're actually gonna start doing that, because that's what we'd all find more beneficial. Like, we've been doing all day. If we were able to just be on everyone else's screen and just do it all together, that's very helpful. So I agree with you, and we are gonna do it. This is the first time we did like an option class today, which that was very great for me personally, and for all of us as a team. I think everyone did really well. Twitcher, YouTube stream. Yeah, and we could do either of those, or even both. I know how to do both of them, and I know how to link up bots to them, where we could do all of that stuff. And that's okay, because it's not intraday. Intraday, we're not able to do Twitch or YouTube because it lags a few seconds, so we wouldn't want to use a scanner or something based on that, even those few seconds messes it up. Yes, price alerts. Does anyone not know how to do price alerts? Like, huge. Like, I get the price alerts trigger, and I'm sometimes annoying having them all trigger in the morning, but when it triggers, I know that I put the time where I should take a look at it. That's what I did on here. I instantly entered. Yeah, it actually is being on YouTube right now, JD. And it's good, because I did not plan to like do a class or anything where you're actually seeing me go through the thoughts and like even retract my thoughts sometimes, just like you always have to be doing intraday. You're looking at something, you start second guessing it or going a different route with it. And that's really what you need to be doing. You just need to always keep breaking it down. But does anyone have particular questions? Otherwise, we just start speeding up, start banging out tickers, and I'll go to the shorter time frames and get to the point. But I think multiple time frame analysis is so huge with swing trading, and it's such a difficult concept to be able to get given to you in a straight way. So I just want at the end of this tonight, just help whoever's listening just get it down and not have to worry about it, because you're going to lose 10 times out of 10 if you don't know how to do multiple time frame analysis or piece it together. It needs to be something that's fluid. How do I calculate my stop loss? Oh, it's a different beast, but I use I generally go with swing lows. So there's a bunch of ways. I would just say anything besides mental stop loss. Like, until you deserve it. You teach yourself that you deserve that mental stop loss. Never do it. I prove myself wrong all of the time. Would love to hear your process for multiple time from now. Sure, Diddy. I really want to do it where I could have the stream going and be on my screen. Let me message JC real quick, and then I'll keep going. I think in particular for swing trading, being able to stream and point out little things is much more important than it was for the options or anything. So going forward, I think that would be very helpful. Can I post? Yeah, go ahead. Post your idea for go. So Kelly, I'm not trying to not answer your question, but my reasoning for it is there are multiple different right ways, but mental stop loss isn't right. The other ones that I would say are feasible is using the swing lows and everything, which I've always done, but I also see the weakness in it. If you start being a little bit too loose with it, you can also combine that with 5% stop loss. So you're using the swing lows, but no matter what, you won't go more than 5% loss, because I end up piling up losses when you start trading penny stock when you're beginning. You're like, I just lost 20%. It only went down 3 cents. Like, what am I doing? And you would have been much better just cut it 1 cent loss, even if it goes back up, and drives you crazy with the FOMO like I did with HMNY the other day. And I went TX, but I really wasn't getting actual FOMO. It's more so just like, I was like, oh, butt hurt, like being this or that. Because overall, if you take that and extend it out for 100 trades, you'd be winning. Like, and that's why you can find people what they're actually doing great in the stock market. At first, they won't be necessarily doing that long. If they do, good for them. That's great, but you got to be able to start breaking it down. I like this idea on golf. Okay, this is a pure TA runner. Here's left hand. Is this golf continuation? Okay, this is perfect. Let me just quickly finish up here, and then I'll open that on my chart too, because I think that's great. So let's just go to back to here. We could say screw auto, because the point of that was for the concept of the gap fill. So whoever has here open on their computer, we were just on the dailies. We've already done the weekly, which was very overextended. The daily was not the greatest. So then we can go to the 1 hour. So one thing before is I was able to find benefit in using the 4 hour a little bit, but I also learned it from someone on YouTube, and the point is I only like using it for support and resistance confirmation. I don't sit there and like overanalyze it, but if I'm like, I'm not really sure if that's breaking resistance or anything, I look at the 4 hour and break it down a little more. That's all I'm really going to comment on. It's not really important. I really stick to the 1 hour. Like 1 hour itself is like my baseline, because even if I want to day trade, I don't really like. It's pretty obvious that whether it's going to make have a nice trading range for me to be able to pull something out of. So on the 1 hour right now, what like? Does anyone have any thoughts? Like, it's kind of okay. Like we're approaching $20 psychological support, but beyond that, I see a bunch of fluctuating price. I'll show you it, because my chart study is able to give me all the different prices. I don't see anything that great. I don't see why it's going to be holding up here. However, all that given, also keep in mind that it is a low floater, and we trade plenty of low floaters. They're my favorite. And as much as they're my favorite, they're also our worst enemy, because they could go either direction, regardless of what they're telling. Okay, so my point being was $20 psychological support, which I imagine people know, but if you don't, that's fine. Each dollar or each 50 cents or anything, just like we were saying with the concept of using MACD and knowing that there's going to be tons of other people using it. Doesn't matter who they are, they're using it the same way you are. You just know that if they're seeing that cross, they're going to be making a move. And this, they're at $20, they're going to be making a move. Could be up, could be down. It may be support, maybe resistance at any point in time, but that is an important level. Just because you see $20, there's something that catches your eye with that. There's something that catches my eye with that too. So that when for Cali, I do my stop loss. I never, like, I don't see the value in going at $20. If this had a bunch of support and resistance right at $20, I think it would hold $20. Because I don't see the value. I'd go $19.98. And at first, I used to go $19.99 until I started to get stopped out a little bit. But having that little bit of wiggle room is really helpful, like incredibly helpful, especially when you combine it with level 2 and the full books. But I don't see anything that great on the 1 hour. If anyone has any thoughts, more than happy to see it, and starts looking a little bearish. Then let's go to the 5 minute and see if we see anything better. Again, I don't see anything that beautiful. let's find a support level. I want you guys to tell me. I'm posting the chart. You guys put where would you guys consider support, and where would you put your stop losses? There's no right or wrong answer. Just curious to get thoughts and get everyone involved. Support for I think it's 5 min 5 day. But even if you use 5 min yearly, think about that. That's a question. Because if you have the 5 minute and yearly, let me actually open that up so we can actually go into that. Handsome, striking figure, explore the world and take them with him. Okay, I actually don't know if we could set up that long of a time frame. But my point being is, sure, you could see something all the way on the left, but when we're saying that we want to be doing things that we know the entire herd is doing, I don't know if that's the best term to use, but a lot of other people are using, if you're going to be using a support and resistance level from 1 or 2 or 3 years ago, you have to imagine that it's going to be a little bit less significant than it would be when we're all the way at current time. So when I'm looking at the 5 day, we're able to really extrapolate something, but we weren't able to see anything on this chart that's significant. Sure, I would say let's extend it. Probably not all the way up to the 1 year, but that's not what you were getting at, but that is what I'm getting at, because I would just extend it out. Like, at some point, you're going to find a support and resistance level, regardless whether everyone's going to be using it. I'm telling you, someone's going to be using it, whether it's a market maker or an algo or the guy next to you. Someone's going to be using it. You can't hide. I messed up. 2030 would be my bottom support. Okay. Does anyone else have a thought, have an opinion what they would use it? Reese, so where would you set your spots below your support? How do you like to do that? So you go 2020, 2029 or so. Okay. I see that. Yeah, this bottom translates really bad. 2028 stuff. Okay. Bree, that's how you did yours. Okay, so let's consider we had a bad entry today using that. Again, I think this is great because I'm learning it too. Okay. Even if we entered at one of the peaks today, 2130, okay? This is what I need to get better at myself. 2130, okay? So that was our entry, and you're going to be setting your support at 2030 and your stop at 2028. So, go back to my 5 minute. The thing with support and resistance, they're both, when people use one support or resistance, it's not totally true. Maybe if there's only one or it's very defined, it's the exact same price, that would be correct. But the concept of it is what's important. Being able to see support and resistance. So you see all the way on the right, we see, let's do resistance first. You see, go back to pre-market on Friday. You see 8182, 92, 82, 2170, 2135, 2230 high, 2138, 2130, 2123. So what would you think? The answer would obviously be 2115, 21, let's just use low number, 2123 to 2138. I mean, that's a 10-15 cent range. If we would choose 1 penny in there, that would probably not be our best bet. So we could use the high end of the range, low end of the range, kind of dynamic. Now to get to the point, I would probably use 1999. Why would I? Sure, you guys are right. Like, definitely that would be the support level. I think that's totally fine, especially using, you guys did a great job using this one, actually. Oh, I just messed that up on my computer. The Surface Pro sucks. You guys literally have that perfect 2030 resistance there to be using as your support level. Even if it's only once and a while ago, being able to use one that was defined and you're using that exact level, it means more than you choosing 2030 when the range is 2025, 2030 or something. at least weigh it in and everything. So we look at more to the right. I see 2025, 2009 low into close. I have a feeling you guys would get slapped under stops. The MM would slap your stop loss out. But my main point being that I used to do the exact same thing. But what is the calculation of the difference when you're trading a $20 stock? You have either 2028 stop, where that's going to be your exit, or you could go with 1998 with a lot of bid support possibilities in between that, and the $20 psychological support that you'd be avoiding. And then you calculate the risk reward for that and factor that in. Those 30 cents can, I'm not saying I'm like right, wrong, or you should do it instead of yours. You need to factor it into the confluence, which is another word that goes with the multicollinearity that I mentioned earlier. The confluence is really important. Confluence is using all of your indicators in the right way together. It doesn't matter whether you're using one for this, one for that. Like, yes, it does, but no, it's really, it's used all together, just like you do with the multi-time frame analysis. It doesn't matter if you're great using the 1 hour. Someone's like, oh, I'm great on the daily. I don't really care. Like, you're not going to be able to trade anything because you need to go to smaller time frames to do an exit. So my point was just, you guys would probably get slapped by the stops. And if they do hit my 1998 and I don't do it smart and I don't keep an eye on it, and when I see it gets to $20, it's getting really weak, and decide to sell and take some profit, I'm probably fucked too. Like, I'm probably really fucked if it breaks down that 20, because that means it's probably gonna dump. So when it breaks, it's like to be very screwed. But just something to weigh. Just something to weigh. It's just a good point, because I did that for a very long time. I was really struggling with the risk reward of it. That's my hardest thing to be able to perfect and just manage, because like someone said it in the chat earlier, it's all these winners, and I just love to piss my gains away. It's like you just mismanage one and you can't do anything about it. I'm just like, I just stumbled over my feet the entire trade, and just like I'm like lose like 10% in like 5 minutes. I'm like, oh, that's great. And you can't let it, you gotta keep moving on, but it's really easy to do. I'm gonna go to Galt. I'm sorry, I'm rambling. Okay, let's see. Galt was QTA from last night. It was after hours. This continuation was to hold 520. If break 550, it can run to 580. Okay, I love how you're even saying those levels without even looking at. When you say continuation, I don't know what was it up the day before that. Use your chart. Doesn't look at mine. Okay, daily. That was a huge daily candle, but you were playing for continuation. That's okay. Hold 520, break 550, run to 550. Let's use my own chart. Let's see. Okay, one more time. Now I got my charts up side by side. I'll actually send this here. Sorry, my flexible grid studies were all weird. I'm doing it right now. There we go. This was originally almost going to say, but we'll do daily, weekly, which is really good. If you're looking for an action, any sort of short-term entry, this is what I would probably advise going through, even ignoring the 1 hour and the daily. But I still like 1 hour daily better, but this will be really useful to wrap that up. Now I'll do 1 hour on the daily. This is what you want. This is what you need. This is the path. Okay, perfect. Without even like checking the actual levels, it sounds like you're gonna be just fine because you've actually thought these all out. I'm gonna retype in the chat so I can just see it closer to that. I think you're doing great. By even writing that down in the first place, you're a step ahead of 90% of all the people. And by knowing that you've been studying and actually doing it, I'm going to go on a limb and say that these levels are going to be quite nice. And that if I would disagree, it would be a matter of opinion. Okay. Let's see. So in those goals, pure TA runner, which is great. That's totally fine as long as it's not up too high. Continuation. I'd be a little scared of continuation when it's a TA runner, but has to hold 520. So for this, I would originally go to my 1 hourly and daily, which is the bottom one. So let's see what we get. Hold 520, break 550. I agree. You look right there. You see 520 on my chart, and you see 517, 520. 100% agree. You would need to hold 520, and that's where you can factor in. If I want to go below 17 and like give a little bit more fluctuation, it really depends how it's trading and what the volume is that day. Okay, and then we said if it breaks 550, come to 580 PT. Kind of hard to see in hindsight now where we actually see that it did break and go, but look at it, you see that we saw that it was very defined in the 520. Imagine we just broke out a little 520, a little bit above. What would your price target be? You have no idea until you look at a chart that has that price on it. So that's when we take it to the daily. So we go to the daily. You see where we are right now, where we would have been, just a little bit lower on that green candle all the way on the right. So we would see $5. We see 582, 469. I'm just going through the little blue numbers that are on my chart. $6, 314. So we don't see anything super defined. $5 is notable because it's actually there, and that's the psychological level. But we were also above that price, I think. Run to 580. I mean, I still think that's a fair PTI. There's nothing to argue. If I go to the 5 minute and hindsight bias is 2020, and 615, high of the year 674. I think that's beautiful. I think that's great. I'm not even going to go over your work as if I'm like critiquing it, Rhea. I think that's great, and I think you should just keep thinking like that, and like keep writing that down, like sharing those ideas and everything. Because fine tuning that is how it's going to be. It could be me saying this or that, but you're just going to fine tune it yourself. That's great. Good job, dude. My only comment, not that it's right or wrong, is when you're doing continuation on a TA runner, you just need to be a little bit careful because if you look in the news on a ticker like this that was running really hard TA is like 3 months ago, like one of the very undercover tickers. I bet you if you go check who's alerting that and how it's being traded and like volume spiking out of nowhere, not going to hold its gains regularly, but continuation is a logical concept and it's very fun to play continuation plays. Just a little comment. 770 gets you gap on goal. Let's see. Well, that's a perfect concept because we just like we couldn't use the 1 to go to the 580 price target. I also can't see that on my daily chart either because we haven't even been there before. So let's go to the top picture, which is great. It's such a good example. So we go to our daily, we can't say anything. We go to our weekly. We also came out weekly all time, so it's not as helpful. So 674 is what I see. What price did you just say? 770. Where do you see 777 gap? $2014. Okay, I'll go on my chart. True. I do see you. See exactly what you're saying. I don't know like whether it would or wouldn't. My own personal thinking would be it's almost like a nominal gap because although it was a real gap and it will have a little bit lack of support resistance, there was still it still traded within those levels previously, and it was 2014. But you are definitely right. That is an actual gap. Actually, this is a great example. I still call it a gap, but look at this candle. This is what I meant. By definition, it's not really a gap as far as I know. Let me see if I can define gap or gap fill. Because when we see all these huge red candles, that means during that day it was super volatile. If that would be a daily, is that a weekly? Yeah, that is weekly. That was a huge trading range in the weekly. I could extend my dailies longer and tell it. Here, I pulled up my chart to that time frame. Even if it's really zoomed out, it'll be good.
Losing Tony is losing a member of your family, our CNN family.
Okay, so I pulled it out to like the few years, and then I just honed in on there. So we're on the right. It's not current, but the gap fill idea is that, I mean, you're fully right. I mean, that's definitely a defined gap fill. We would just have to factor in how we do our risk, do our position size, and everything that it was a while ago. But yeah, I think that's a good price. To check if the exact price you said was right, what would we do? Just like we did on auto, I'm going to go to that last candle, that one originally right when we dipped, and pull up those numbers on the candle. Yep, exactly, Ree. So this is what we got. 775. What number did you say? Let's see. What do we do? 777. There we go. That's beautiful. Even you would have said 77, 77, 75. That's a tongue twister. 777 is even better because nominally psychological, but that is a little bit of a psychological level. It's every quarter. That still has some significance. 77 would be more of a confirmation. 2 pennies above. You can also have really candles with the values. Yeah, I don't know. I think I changed. I have one of the settings a little bit different. I shows you the date. Let me see. See, I don't think I can because on my top it has all the different titles and this and that. But I do know I could change one of the settings within settings and make it where I could have like a whole hover over thing, give us all of our values. So overall, I think here that was some great analysis. We covered multi-time frame analysis, multi-collinearity, confluence, gap fills. We looked at auto, which we're going to look at again next week. We have our alert set, so I've covered setting alerts for your swings. We looked at some indicators that we'd be using and how you need to use what works for you. We use RSI, volume zone oscillator. We just introduced, it's irrelevant right now. We use buy sell volume, MACD, the 3 significant aspects of using MACD across the. I actually didn't answer number 3. I think if I would go back, I don't think I answered number 3. No one even said anything. Number 3 is divergence. We have 1 is the cross, 2 is being around above or around 2. Oh my god, what am I freaking saying? It's so late. 0 being around 0, being above 0, and doing the cross is more significant than doing the cross in negative territory. It's just something you need to factor in when you're using MACD as part of something that you're using to take an entry, or whether you're considering it bullish or bearish. And 3 is divergence, which I clearly am a noob at for not even saying number. So I would love to study a lesson with you guys on divergence because I've been pushing for everyone else to do a great lesson on divergence because no one uses it. And beyond divergence, trading journals, 99.99% of people don't do it. They'll yes you when you ask if they do it. They don't. I was not great about it. I've finally gotten a little better. And then even at that point, I'm analyzing my trades and analyzing ones that go bad. And when you're not finding amazing success, you have no excuse to not literally be doing it. If you're doing great, like that would be fine. You're only picking the losers and going at it. But corner after the symbol and having the most. Oh, true. You are right. Can I change that color? That's interesting. Cool. Thank you. Always learn more on this program. It's crazy. at least Roy and JD, like this has been helpful for you guys too, right? Like I think being able to just discuss it with someone, even when you know you're right, it's helpful. Like golf, you're having someone say, I mean, yeah, being able to that you were right. You were right, so you should know that you're doing very well. Good job, bro. Am I? Sorry. AKA, I was saying Roy's doing great. You too, JD, because one of the biggest things I say to all of the people that I meet, like, I go out of my way to just, not to help people, but just interact with other people because there's so much benefit in helping others that by doing this all with you guys right now, I'm reconfirming everything in my own mind where the biggest thing is seeking help. Even if it's not help, you don't have to tell yourself you're seeking help. It's just seeking something. If you don't do something for yourself, you're not going to do shit. And like you need to go through some hard times. It's expensive education, but every mistake is, even the worst mistakes are worth it as long as you learn from it. Oh, I'm sorry, gal. So many people, so many girls on here don't say anything to me when we call you guys bro. You guys should yell at us. Did I miss any question? No, CLWT had a very similar thing as Gall. Okay. What can we use to post snapshots in here? You could use the snipping tool. Do you have a Windows? You can use snipping tool. That's a program. Or there's one called Greenshot. How do I get it to post? By using snipping tool, you're automatically copying it. So then you would just do Control V while you're in Discord. Or you could like right click and do copy. Yep, I never used to know what snipping tool was, and then I learned it. Yep, Control V. So that's very helpful for doing that. There we go. CLWT. I like how you're even better than me. We can even cover it or anything because it's not that I neglect it, but it holds different significance using Fibonacci levels and retracements. That's a whole nother beast. And that's the thing. You guys have been on all night with me. It's like every time we get to some certain point, and we've been doing it for hours, there's a whole nother beast to cover. Like, we haven't even covered that beast yet. And sometimes it's better to leave it for another day. And that's why I wanted to, when we were going through the options thing, I was like, let's just catch up to the other questions and make sure we thoroughly cover each one, not just pile it on ourselves and let ourselves get so far behind. CLWT should run if it holds 610, can gap fill at 640, has to hold, run to 7, XPT. Roy, you need to just keep doing that, and for what is best for your own sake to be motivated to keep doing it, post your watch list all the time on like stock twits, on whatever social media, share it in the group, because when you're making it like that, it's not really about being right or wrong. Your levels are levels. Like, it doesn't mean it's gonna work. It doesn't mean it's gonna literally hold support or this or that. You're saying the exact levels. Like, you're at that point where it is what it is. You just need to set your price alerts, and then it all comes down to the smaller parts of it that, like I was saying, the books don't give you. You see all the big picture now. Now you need to manage your risk. You need to be taking good entries and watch you reading the tape, this or that. Like, tape's a whole other much, but I'm not channel here on that. Our side above 70, but healthy. Cool. Okay. Also, you could. I know. I don't know why. Sometimes I use F2 for push to talk. I actually think I may have just been silent for 20 seconds, but it does it all the time. And sometimes my mic gets stuck, and then I don't think I'm talking to you guys, and then everyone's like, I hear your background. I'm like, damn it. So my fault. Just always tell me when I do that. Okay. Yeah, Discord can get really frustrating sometimes, but it's also very helpful. Do you guys have any other specific things that you think would be good big picture as you go into it? Where you don't even understand what you're doing for yourself. You are amazing. You will not find other people that are actually paper trading, no matter how many times you or I or anyone could preach to them that they need to paper trade. People come into the stock market, win a few trades, get lucky, and then go bigger, go bigger. Like I just lost $25,000, and it's not the point. It's not the amount of the money. There's no point in being trading real money when you don't know what you're doing. And even when you do think you know what you're doing, if you're losing, it's real money. I think you're doing awesome, Marie. That paper trading, like, I didn't start paper trading when I started, and then I had to finally slow down and do some paper trading, regardless of whether it's on a platform or just even in psychologically, it's like, oh, I would have taken an entry there and letting it play out. So I think that's great. Have you been keeping a trading journal, Ray? Also, the biggest thing is focusing on the education, which clearly you have because you're able to have justification for what you're doing and all this. You have to know that you have resistance. It's all within a certain range that you're going to be getting screwed. Maybe your stop loss could have been a little different, this or that, but there's seriously people who do things blindly. Like seriously do it blindly. And the thing about it, you did it blindly probably when you did your first trade. And I was on Robinhood, only trading off of Robinhood charts, doing it straight up blindly. Yeah, when you guys really started getting into it last week, dude, a week into it, you're gonna be rich. You're gonna be rich. Just keep it up and just like keep doing that. What you're doing, it's all about being able to improve. Screw around with your money. It's all able to stay in the game long enough to realize your weaknesses and become a badass and have a success rate. And as you do it with the paper trading, you're going to be able to calculate your actual success rate, see which kind of setups you're losing at, what kinds you're finding that you're better at. Because that's one of the best things about being able to do it structured when you're a beginner. Because you could hand over, if you keep a trading journal, which I highly, highly, highly yell at you to actually do, you'd be able to hand over that and just say, hey, can you go over a few trades with me, TJ? And someone who has a lot of experience like that can literally go through, and even if you weren't there, you just hand it over, he could go through and he could isolate your weaknesses for you that you haven't even realized you have. That's why I'm handing my trading journal recently over to TJ, because sometimes you go in little streaks. It's like, all right, you're doing this, and you can't see what you're doing, but it's nominal. And you need someone from the outside to be able to give you that different look upon it and be able to just tell you what you actually need to be adjusting a little bit more, which is exactly what we're doing right here, just sharing thoughts and going back and forth. Awesome. Can you give me an example? Yeah, so we actually have a trading journal channel that we just started doing. And it's gonna be, you're gonna have to like optimize some of the columns for yourself, but I just clicked on that channel with you. We have some great ones. JC, that was option settlement. If you scroll up a little bit in that channel, your trading journal blank, I'm opening that with you to check which one it was. Oh wow, that's very serious. I have this downloaded. Okay, well, that is a phenomenal journal. Wow. Okay, I'm gonna take a look at that one. The one Caleb posted, you see that? That is really nice. Oh, there's so many sheets in there. This is great. Oh, where's my channel? Awesome. Okay. Yeah, so that really be my recommendation. And when it comes to there's a difference between talking it out and paper. So seriously, you have a lot of resources here with guys for like years upon years, like some of them have, where TJ and so is Frank, and so are a lot of these other guys who they've been exactly where we all are, even if it's not at that point in time. They've all had to go through certain different weaknesses, this or that, where we could all see in different perspective. That training journal will be your key to success, and everyone else's key to not knowing what the hell they're doing wrong. Keep up the good work, both of you. JD, you too. Great. It's fun. Like, there's no reason to be silly with it. Like, it's awesome. Oh yeah, Rico posted on Stock Twits. Get some followers. Tag the tickers. There you go. Some great TV. Swing trades are honestly my favorite, and I'm way better at it, and it makes so much more sense when you're winning or you're losing. You're not trading pennies, and you're not day trading those pennies. I like that watch history. Boggling my mind how ahead of the game you are. Even when I'm saying it, you're so ahead of the game. JD, pair up with Reed, very nice. I'm generally always here during the day and on voice. Sometimes I'm like in and out, but this is the main room I spend my time in. Otherwise, I spend stock twits and stuff during the day in trade type of. What do you mean? Trade. Uh, I think you're asking what. Oh, you're asking whether I'd like to do more day trades or swing trades, right? I also have interactive brokers as a broker, and I'm on a cash account, so I'm able to do unlimited day trades there. So I use that unlimited day trades. Robinhood, I'm under 25K, so I use that, but I also use it for the swings, free day trades, as we all know. And for a while I used Ustock Trade, very great resource, but when it comes to not even using it to your advantage, but knowing the platform. I guarantee you I could talk to almost anyone who's actually doing beyond the few that I know. They don't know the kind of platform they're using. Yeah, it's a peer-to-peer platform, but the market maker to buy at the ask, sell at the bid, or it's never going to work. I do recommend Ustock Trade if you're going to be smart with it. I like it. Is it you as the best? I used to be Biostocks because that's my background, but I would never say that I have an attraction to the biostocks. It's almost the opposite because being attracted to biostocks is the worst thing that could happen. Finding some sort of way to justify yourself to liking bios is the key to screwing yourself. When I started off, I focused more on the bios and I played FDA plays. So PDUFA is like that huge, big acceptance that you're going to get when you go up big or up down. Every time I wouldn't have considered that the market makers, the guys who are buying big, are already planning ahead. So even when I do win, it doesn't go up that much. And then I would lose like 4 in a row and just get wrecked. So overall, it's not a good strategy, but I do have a lot of bio knowledge where it really is handy when it comes to catalysts. Like seriously, catalysts are one of my favorite. And I think we have used to have okay. So I say it to TJ, and I have to say I'm wrong, but number one, forget the rules. Remember the chart. You're not smart enough to know how news will affect price. The chart always knows the news. I say often I disagree with it, but I don't. Yes, forget the news. Remember the chart. The value. It's not about the news itself. It's about being able to use that, use the support, use the resistance, make it all in one confluence. Every little thing, the tape, the level 2, use it all. And I find that wanting to find bullishness in something that is just a technical breakout, when I could be finding a stock that's undervalued, had either good news and did not react that much, or had bad news and got dumped too much. Lately I've been really loving the dumps. I'm gonna have JC wrap up the stream just so we could have one little stream now, because just to have some of the concepts that we covered. I think that was pretty good, and then we could do a different day where we're actually doing like a full swing trade class, because this was just on the dime, and I'm glad you were here and just asking questions and stuff, because it was very helpful for me to just get it out and for you guys to discuss it. So we can have this on YouTube. And in the future, we can do a swing trade class and tie in all the concepts that we were talking about with the options class. That was awesome. Not a problem, Marie. It was a fun night. Good Friday. So at the end of the day, we're going to be making more money in the future from it. It is definitely a humbling experience for all of us. It's mutual. That's why it's great. And as always, if you guys have any questions, like always feel free to like message me or whatever. You're welcome. I wouldn't even consider it a class. I didn't plan it all. You had to deal with me hopping from one thought to another, but I guess you, like I was saying, just give it to you straight. So this is literally how I go through it. This is how I would do it if I explained it to someone sitting next to me or one of you guys. Definitely, I agree, and it helps everyone learn better. Same when you're always like studying for an exam or something. Study about that exam in a book all you want, but you're gonna fail the exam. I could tell you from experience. It's like to study for like a biochem exam, you cram, and you think you know it. Like, I spent so much time studying, but you didn't do any problems or discuss it with your friends. So I fully agree. I'm not in college anymore. I was just referring back because I was pre-med, so I could definitely understand when it comes to the biotech and all the exams. Where you study the book all you want, but if you can't talk it out, you also can't do a problem. Oh no, I started off with physical therapy school, but I decided that I had to change path because I am in love with trading, and this is amazing. Yeah, like never would I have thought like that would really be the true decision. That would be happy, and just gotta find a passion and go for it. That's sweet, Ree. Like sometimes I've went through the biographies, the UT biography channel up top. We have so many different, so much diversity within the group, different careers, different backgrounds, and it all is a good thing. We have a big things where I can help with biotech stocks, and everyone can you can help with when it comes. We have plenty of real estate stocks we trade or real estate REITs. I don't know much about REITs. I'm sure you may even know what REIT stands for. But you probably would be able to get it better than I could. Definitely diverse group. I was in many other groups before I found this one. There's just no comparison. It's not even up talking its way. My favorite thing about it is you don't have to like promote this group. We don't go around telling